Saturday, August 31st, 4:14 p.m. New York time. Welcome to Winning Wall Street's Money. It's the last day of the month. Going to go over the higher time frame, the monthly. Look at the major currencies, crypto, and yields. Since the end of the month, already halfway through the year, and still have another scheduled Federal Reserve meeting where they determine the short-term interest rates, because they are a separate agency from the federal government that controls the policy. It's not the executive, it's not the legislative, it's not the judicial, it's the central bank, aka Federal Reserve, that makes the policies and sets the short-term interest rates. But what I'm going to show you are the yields. And these are fixed income products you could buy from the U.S. Treasury. What the industry for the mortgages, loans, banks, auto loans set theirs with too. So we're looking here at a 20-year chart. Each candle's a month, and a 30-year yield. Red for the month, lower low, lower high. Still inside the range of last year. Here's the low of last year. Here's the high of last year. But down strong. Yep. So if the Federal Reserve leaves the interest rates unchanged this year, these you're going to see momentarily, because there's different durations of these. 30-year. There's a correlation here. This is a 10-year. New low for the year. Then the 30-year hasn't taken out the low for the year yet. That's right here, that yellow candle. Very close. But 10-year, the shorter duration, new low for the year. The 5-year, new low for the year. Again, even shorter duration. It's still inside the range of last year. And the 2-year yield, new low for the year. Still inside the range of last year. So the shorter yields, shorter duration, all new lows for the year, this month. It takes a while for the longer one to catch up on. We're seeing a higher probability interest rates will be continually going down. And that has an effect on currencies. Let's go check out the US dollar. The US dollar index, 20-year chart, the US dollar index. Here's the low for the past 20 years. Here's the high for the past 20 years. And we made a new low for the year. So I'm going to adjust this down here. New low for the year. Standing. Now, for my Patreon members, I've been sharing for months, weeks, days, trading bearish, making gains, trading bearish US dollar. Each is to their own if they're going to take the trade or settle on some other financial asset. Again, trades have been winners here, trading bearish. Roll correlation, US yields and dollar. They often trend in the same direction. Lower yields, aka lower interest rates, lower dollar. Making our dollar, where the other currency from abroad could buy more US dollars, giving them more buying power. We are still inside the range of last year. You got it? Last year's high and low on the yields and US dollar haven't taken out that period of time yet. Very important to see if we have a break below or above those yields and US dollar occur this year or anytime. As soon as we have a break, the high or low, very big different market sentiment will come. And when that happens, come back and I'll give you the update. What's playing out? I personally think that should have been discussed. But the mainstream political parties are working again in their own personal interests, not for you and me, to discuss this very important thing I'm showing you. And just watching this first time video for you, if this is your first time, I don't expect you to grasp the whole concept where I'm coming from. Baby steps. We all have our own learning curve, how long it takes to get something understood. 20-year history, European euro. There's the high. There's a low. A consolidation phase, low of last year, high of last year. And it made a new high for the year. Yep. One of the largest currencies, weighted average in the US dollar index, is the euro. Just like the yields in the US dollar, I highly recommend you watch if we break above or below the high of last year. Japanese yen, here's the high for the past 20 years. This year made the low for the past 20 years. And we haven't taken out the high of the year yet. That's right there. And the British pound. So again, euro, Japanese yen, British pound are the three largest currencies in the US dollar index. Here's the high for the past 20 years. Here's the low. Pound made a new high for the year, and we took out the high of last year. Alert, you got this? We finally have a currency that broke out of the range of last year, the British pound. That's a trade idea. Where's the entry? Well, I discussed that in my other videos. So we had a breakout, and I'm looking closely for the trigger to trade bullish if it occurs. Australian dollar. Here's the high for the past 20 years. Here's the low for the past 20 years. Still inside the range of last year. Here's the low of last year. Here's the high. This month actually made a new low for the year right down here. Share some more insight. Australian dollar, Canadian dollar, New Zealand dollar. Those nations, they're heavily weighted in commodities. Yep. The metals, gold, silver, copper, those kind of metal commodities, and energy, crude oil, coal. Again, much more big impact on the value of their currencies and the value of those commodities. There's a correlation there. Canadian dollar. Look, here's the high for the past 20 years. Here's the low for the past 20 years. And we made a new low for the year. Buyers did step in. Still inside the range. Actually, we took out the range of last year. Yep. That's interesting. It broke the low of last year and buyers stepped in. And you might have had a lot of shorts down there and they were covering. But big difference. You had the British pound making a new high for the year. The Canadian dollar making a new low for the year against the US dollar. Big difference on their economies. Certainly, United Kingdom is not heavily weighted in commodities. Swiss franc. Here's a high for the past 20 years. Here's a low. We have not taken out the high of this year yet. The high is right there. Let's label that. Do you ever hear the term safe haven currencies? Well, Swiss franc, Japanese yen, and US dollar are the three major safe haven currencies. It doesn't mean they're all necessarily performing equal or better. But we do see a turnaround in the Japanese yen and Swiss franc, right? Absolutely. Yeah. Mexican peso. Here's the high for the past 20 years. There's the low. Remember, this year they had elections and have a new leadership. Same political party, I recall, but new leader. So Mexican peso made a new low this year against the US dollar. Huge trading range, too. Yeah, look at that. Huge consolidation over here. Makes sense. Buyers are stepping in here. And we did take out the low of last year, too. So we identified two currencies that broke the lows of last year. Canadian dollar, Mexican peso, and vice versa. British pound broke the high of last year. US dollar, Chinese yuan, new low for the year. So when this is trending down, that's in favor of the yuan. Yep. New low for the year. Still inside the range of last year. And now the crypto, Bitcoin. Here's the low. Yeah, that's not 20 years of history. Not yet. Here's the low. This year made the high. And since then, we've been trending back down. Here's the low this year, but off the high, it's been trending back down. Huge trading range this month, which tested this big green candle, midpoint. We tested it, broke below it, but closed above it. That's a trade idea using the faster time frame for they're looking for the trigger. Thank you for taking the time watching this video. That's it.